I think the key to keep in mind is that Bitcoin is digital capital. It's going to be 2 to 4 times as volatile as traditional capital like gold or equity or real estate. It's got 2 to 4 times the performance this decade of traditional capital. It's the most useful global capital asset in the world. You can put more leverage on it. You can trade it in more ways than any other kind of capital asset. So the volatility is the bug, but the volatility is the feature. And we believe that digital capital, because it's so much more performance, is the basis for an entirely new set of financial instruments that we call digital credit.
Is there any argument to be made, though, and given that that Bitcoin has sort of done a round trip since the beginning of this administration, that we are now finally getting to some kind of price discovery moment that's fundamentally different? That in the past, Bitcoin, because it wasn't in ETFs, because it wasn't as broad-based, that there wasn't the kind of price discovery that's now available today, and maybe these prices are more realistic than what had been the case before.
Well, there's no doubt the asset is seasoning, and that's a good thing. We just had an all-time high, Andrew, 4 months ago, October 6th, I believe. So if you've got a time horizon of less than 4 years, you're not really a capital investor, you're a trader, and the traders are having a field day with the volatility, good for them. But the capital investors are looking out 4 years, and if you look at a 4-year time frame, Bitcoin is 2 to 3x the performance of the alternative capital assets, and anything built on Bitcoin over a 4-year or more time frame is going to outperform for the same reason.
The concern, as you know, about strategy itself, to the extent that there are worries within the Bitcoin community, is that, you know, if Bitcoin continues to fall, and I know you've made the argument that you have enough cash on hand to handle this for the next 2 years, that there could be a moment at which you have to sell, not buy.
Yeah, that's an unfounded concern. The truth is our net leverage ratio is half the typical investment grade company. We've got 50 years worth of dividends in Bitcoin. We've got 2.5 years worth of dividends just in cash on our balance sheet. So we're not going to be selling. We're going to be buying Bitcoin. I expect we'll be buying Bitcoin every quarter forever.
Just so we all understand, what is the price at which this story gets much more complicated for you and therefore the rest of the Bitcoin community? I think there's a sense that given how large a player you are, if the price of Bitcoin were to fall to a place and continue to stay there for 2.5 years from now, and you were forced into a selling position, that unto itself could create a cascading problem.
Andrew, if Bitcoin falls 90% for the next 4 years, we'll refinance the debt.
Refinance where, Michael?
We'll just roll it forward. I mean, again.
But yeah. you think banks would lend to you at that point?
Yeah, because the volatility of Bitcoin is such that there's always going to be value. Look, you're at 68,000 right now. Literally has to fall to 8,000, then we just refinance the debt. If you think it's going to zero, then we'll deal with that. But I don't think it's going to zero, and I don't think it's going to 8,000 either. But the credit risk is de minimis at this point.
I guess the bigger question is, I know you have a stock of cash that you can use to continue to pay out the dividends and beyond. How long does that carry you through?
2.5 years, Becky.
I thought you had some.
We've got 2.5 years in cash. We wouldn't have to raise any money.
Okay, so that includes the debt. That includes the debt due next year as well.
We have 2.5 years of dividend coverage and debt coverage in cash. We raised $4 billion this year so far. We raised $25 billion last year. There isn't credit risk to the company. The story here is that the digital credit, STRC, is the most popular credit instrument of the decade. It's trading 100 times as much as traditional preferred stocks, and it generates 2 to 4 times the cash flow of any other fixed income instrument. So that's the revolution taking place. There isn't any credit risk in the balance sheet of the company.
Why do you think the stock's down 60% over the last year?
The company's engineered to be amplified Bitcoin. So when Bitcoin goes up, we go up faster. When Bitcoin falls, our volatility is higher. We've created an asset that's got an 80 vol, and so the stock falls because Bitcoin's been in a bear market for the past 4 months. It's been an extreme drawdown. But at the same time, the other day we had a 25% increase in the stock price in a single day. Our stock is more liquid, on a market cap basis than any of the Mag 7 stocks by a factor of 2, 3, 4. The open interest is the greatest open interest of any of the major stocks in the market. So that volatility creates interest, creates liquidity, creates the opportunity for us to issue the digital credit.
Michael, can you help us with one thing? There's some folks in the community, the Bitcoin community, that believe that there's a floor on Bitcoin at around $60,000 because that is the average price that is effectively or cost, I should say, for miners, and that as a result, the arbitrage will always be around that price. I don't know if you think that's true or not, or whether you think there's a possibility it could fall below that, in which case what happens to those miners. Obviously, for Bitcoin to be successful in this sort of decentralized world, you need the miners to be mining. Otherwise, the whole thing doesn't work properly.
If you're focused on the price dynamics of Bitcoin, I think it's much more interesting to look at what the banks do, because as the large banks roll out credit against BTC, and you see a lot of enthusiasm from Citi, from Schwab, from JP Morgan, from BNY Mellon, et cetera. As they roll out credit, they're going to negate the miners' influence by a factor of 10. Also, the embrace of large Wall Street firms, the rollout of the next BlackRock Bitcoin income fund is going to have a big impact. And, of course, the growth of digital credit that we're issuing. We sold $7 billion last year. We sold $400 million in a few weeks this year. So the issuance of that credit on top of that network is going to be 10x the price impact of anything that the miners do or don't do. They're really a third-order effect at this point in the future of the network.
Real quick, if you were to make a prediction about where Bitcoin is, call it 12 months from now, what do you think?
I don't really make predictions over 12 months. I think the Bitcoin is going to double to triple the performance of the S&P over the next 4 to 8 years, and I think that's the only thing we need to know.
Michael Saylor, always good to talk to you. Thank you, sir.